Okay, when you look at companies like yours with a substantial earning, and I know you want to earn more, of course we do. Companies that earn quite a bit annually, million, million and a half, right at a million, anywhere from 500,000 up, you want to consider expanding your company. And by expanding your company, I've been talking to you about limited franchise agreements. And the reason why I talk about that is because I've experienced that and I know that it works extremely well, especially in the state of Alabama, where there are some documentation that is not necessary in order to form a limited franchise agreement. And so, having known that, there is a disclosure that you need to present to your franchisee within a certain amount of time of establishing the agreement. But other than that, just stating the parameters of the agreement and setting up a return on investment, giving them a general idea of what they can expect in terms of growth, that's really all that you need in writing. And of course, agreement and official witnesses. That's how simple it is. And you can expand your company. It doesn't matter who you are or what you do. Now, I know in this recording is subject to be provided to a Bill's bonding company, subject to be provided to some professional strategists. Also, we've got an individual that I'm very sure their company is probably going to get this, and this it's a it's a building collective corporation. They're out on the West Coast. I know you guys are going to get this because I'm talking to companies that either are already making 500,000 plus annually. Some of you are making close to that monthly. And to those who have the capability, the potential to do it. I have faith in you. And so I want to go ahead and keep putting this before you. You need to talk to me about expanding laterally so that you are setting up limited franchise. Now, what's the benefit? The benefit is bilateral because you're going to benefit the franchisee with your history, with the strength of your company, with your credentials, right? Okay. Now, if it's a limited franchise, that means they're going to use their own name. So there's nothing about their operations that can make you liable. Okay. That's the first thing. So your assets will be protected, but everything about your company will be a benefit to them and they'll be willing to pay you for it. They'll be willing to pay you the franchise fee plus a percentage of their production for your assistance in helping them to be placed and scaled in the industry that you're in. Okay. Now, I'm not going to use this recording to go into that with detail, but I do want you to know that we've got some recordings on that. We've got some videos on that. There is a book that we wrote here titled Abstracting Made Simple. You see there, it says Pathway to Limited Franchise Success. There's a whole chapter in here that talks about how we established a limited franchising um, structure some decades ago, and we still use it. And we've got people that we put into the business um, back in the 90s, back in the early 2000s. All those people are still in business. Yeah, we still do business together. Yes, and I'm consistently assisting others in starting their own limited franchise unit. So even if you've not gotten on your feet well yet, I want to say to you, once you get established and get scaled and get consistent in your revenue, you want to consider expanding yourself. And for those of you that are extremely established, and you may almost feel like, you have arrived, I know that you want to establish something that will sustain throughout generations. We're talking about dynastic legacy. So you want to leave wealth that will be a dynasty that will pass on from generation to generation and expand, to help other people. because there may become a time when your family may not be interested in operating in the corporation, but it'll still be going because you'll have so many other elements that are involved, so many other franchise units that would have become a part of your establishment. So it'll live on for centuries. And that's what you want, but definitely decades. Okay, that's what you want. So that literally while you're sleeping, I know while you're sleeping now, you've got employees and you've got contract labor that works from your local whatever your unit is, or maybe a unit that you may have in another city. They're working from there. I understand that, but we're talking about a growth that will stem throughout time. Yeah, offices that you would have helped open that you might not even remember anymore. But when it's time for them to send in their franchise fee, you'll remember. Do you know what I mean? Okay, so that's just something that I want to place before you. And if you're interested in it, you can reach out to me. That is not what this time is for. So let me move on swiftly into what we're talking about this week. Just bear that in mind so that I can go through and unpack all the details for you. And if you have that book, I believe it's somewhere around chapter 11 or chapter 12, where the book goes into explaining all of the necessary components of the limited franchise unit. Yeah, it's in chapter 11. All right. Yeah. Just gives you an idea. But we've got the contracts, we've got all of the parameters, we've got return on investment to show you how to calculate that, the formula that you use to show your franchisees how they can get that return on their investment. Okay, what we're going to be talking about tonight is twofold. Firstly, how boutique brokerages help unlisted corporations to sell stock. Now, when I say unlisted corporations, I'm talking about unlisted, excuse me, I got to get something to clean my glasses. I'm talking about unlisted on the public stock exchange. That's what I mean by unlisted. So you may not be listed on the public stock exchange, but you can still sell your stock at a pretty healthy rate. Okay. And the way that you can do that is through a boutique brokerage. So when we talk about a boutique brokerage, let me just expand this. Okay, I was going to try to open it up so you guys can see it, but that's not going to work. Let me give you a general idea of what I mean. Firstly, they provide assistance with helping privately held corporations or unlisted corporations to raise capital by selling equity without going public. First thing. So firms that specialize in what they do are companies that are specifically looking for private placement. It involves selling shares to certified investors. So you guys know that in order to be considered an investor by the government and by the powers that be, you have to have a certain amount of liquid net worth. You have to have either a certain amount of liquid income coming in each month, which would be in excess of 300,000, or you have to have assets that are in excess of $1 million. Okay. That's got to be your net worth. Okay. And that's when a group or an individual is considered a viable investor. Right. So there are a lot of us that make investments, but unless we have those qualifications, we're not considered by some entities to be viable investors. Well, boutique brokerages only work with certified investors. What I mean by certified is that they meet the qualifications to be counted as a viable investor. That's a good thing because you know that they're not going to be marketing your stock to investors that have not been qualified. They've not been vetted. That's the first thing. Secondly, when you provide them with all of the necessary documents to put in your portfolio, then you understand that it's going to be going in front of investors that are in the position to invest millions. They sometimes join together. They will create a venture among themselves to purchase the stock. of certain companies, depending on what it is that that company wants to fund. So, unlike the larger investment banks, boutique brokerages offer personalized service. Yeah. Often they focus on like niche markets, specific industries. I promise you that there is a boutique brokerage for pretty much every one of y'all's type of business. Yeah, for every industry that each one of you all are a part of, there's a boutique brokerage. I'm doing it off the top of my head, but I'm pretty positive that there is a boutique brokerage for pretty much each one of the industries that you all are involved in. So what they do is they assist in structuring the offering, and that's what we're going to talk about tonight. That helps them to determine the valuation of your company and prepare an offer and memorandum that would be able to provide potential investors with the information that they need. They also set that documentation up so that it navigates any regulatory compliance that's necessary under certain exemptions that will be available to you all as a Regulation D entity. So when we're talking about in U.S. securities framework, Regulation D involves all those companies that are not a part of the SEC. Okay. So because you're not a public company, then a certain amount of those security parameters would not involve your company right now. So what they do is they leverage their investor networks to match unlisted companies with suitable buyers, facilitating transactions that might otherwise be difficult due to the lack of public market. Additionally, they also help to create liquidity, and they do it by sponsoring certain events through the secondary sales. And the way that they do that now digitally is they will set up a time when you may have a platform. You can do a video. You can do a video and send it to them, and they'll set up a time when there are a lot of qualified investors that they've sent out your portfolio to that will come into that particular meeting, quite like the one that we're doing now. Only they'll be in the meeting, and they will take a look at your video presenting yourself, and they would already have your portfolio in front of them. The video that you would do would only need to be maybe 2 to 3 minutes long, definitely not any longer than 5 minutes. Just talking about yourself, the way your company was established, the long-term goals that you have for your company, any scaling that you've done, any build outs. Like some of you, particularly one of the companies I know spoke to me about having a building that they could use to modify to help those who will be re-entering into society from being incarcerated for a certain amount of years. They'll have almost like a halfway house that gives them like a interim time to prepare themselves to enter back into society, which is a very noble thing. Not only is it a very noble thing, it's a lucrative operation. And that would be something that those who are investors in privatized prisons will jump right on, and they would want to invest in that. But not just them. There are several organizations that would want to invest in that because that's the type of industry that they're involved in, and that's where their convictions are. So you'll find a lot of entities that will be interested in investing in that. A lot of large religious organizations that will be interested in investing in that because they do invest. They purchase stock of various types that have to do with platforms that they can have a passion for. All right. So they'll also set up a pre-IPO placement. Yeah. And so the reason why they do that is because they want to allow a public offering of your company. And that allows investors or founders to partially get involved. When we talk about boutique brokerages, it's a strategy that they use as intermediaries, and they enable capital formation and ownership transitions for companies that prefer to remain private. And there is a benefit in remaining private rather than issuing a public offering. And one of the benefits is that well, let me explain it to you like this. When you issue a public offering, then that means that you're going to get several companies that are going to buy up your shares. Wonderful, right? because they're going to be paying a hefty price for those shares, and they'll be buying lump sums of shares because when you set it up that way, there's a minimum amount of shares that they can purchase. Okay. All right. Now, having understood that, then what you also understand is that depending on whether or not you have common stock or preferred stock, if you have common stock, you give them a voting right. And the reason why it would be more beneficial for you to offer common stock is because if there should ever be a problem and you need to liquidate, then with common stock, there is no schedule time to make consistent dividend payments to your stockholders. So with common stock, you can decide that you're going to pay your stockholders dividends every 36 months. It doesn't have to be every year. It doesn't have to be at a certain interval. Whereas with preferred stock, it's got to be consistent intervals, and it has to be a predetermined amount that you're going to pay them. So no matter what happens to your stock value, you're going to have to pay them at least that minimum to preferred stockholders. Whereas if you establish your company based on common stock, then there is no, especially if you do it with common stock and no par value, then there's no minimum amount that has to be paid in dividends to your stockholders. But what they do get as common stockholders, they get a vote. So it's not always a good idea because they do get a vote, they want to utilize that vote. They have purchased that stock because it is common stock, and they want to have a say in your company. Now, depending on how many shares you issue, it could be a problem because they could have more of a vested interest in your company than you do, which will mean that you and your ideas and the scaling that you want to do can get overridden. So when you become a public offering, it may not always be a good idea. So you may want to remain, it's up to you, none of my business, because there are a lot of benefits in becoming a public company. But if you remain a private company, you can still sell stock on a large scale basis when you build up to become a part of a boutique brokerage. Now, let's talk about what is necessary to get you there. Okay? Because there are some things that you have to comply with. And we've been talking about them, things like a capability statement. We already talked about the capability statement because we were helping you to become vendors with the state and vendors with the federal government. And why is that necessary? You'd be surprised, but pretty much every industry that I'm talking to right now through this video can benefit from being a vendor with the state. You would think in some cases that you wouldn't, but you'd be surprised how they need license, Bell's Bonding Company, how they need credentialed or certified strategists or planners or nonprofit organizations to be involved in what it is that they're looking for. They need estheticians. Yeah. They need educators, curriculum innovators. I know. Yeah, they need all of that. So it's good to register with the state, and it's also good to register with the federal government. And I've walked several of you through registering with the state, and congratulations to a lot of you. You have sent me your letter from the state stating that you are fully registered, and now you're going on to register with the other states. And see, once you register with the state, then of course, if there's anything going on with the local municipalities, you are also qualified to bid on those projects as well. And then the next thing I'm going to teach you is how to go into the portal yourself and see what projects are available for the bidding. Okay. And we'll walk you through the bidding process as well. Okay. All right. So, what I want to say in terms of what gets you together, qualifies you, I hate to use that term, qualifies you, but what prepares you to be presented to a brokerage boutique. And if you can remember, we've done this before, and I've actually given you the name and the link and the contact information for some brokerage boutiques. We did this probably about 4 months ago, and we presented it to everyone. And it's no problem. A lot of you weren't prepared then, and a lot of you weren't a part of the group then. And so we picked up some new corporate entities since then. And so I'm doing it over again. And I will also be presenting you with the contact information for the brokerage boutiques. So it will either be attached to the email that you get with this video in it, as well as the summary, or it's going to come in a separate email. And again, for those of you who I've already sent this to, if you need me to resend it to you again, I will. But for those who are new, who have just come within the past 90 days, 90 to 120 days, I'm going to send it to you. All right, so here's what we're talking about that you're going to need. Firstly, you're going to need the capability statement. And I'm going to real briefly go over the capability statement because I want to get to some of the other parts. And I think most of you are probably familiar with the capability statement, but just real quick, here's what's necessary. It's a statement, normally a one pager, and it needs to be concise. It's like a business resume, and it's a way for your company to be marketed specifically for government agencies, but also for boutique brokerages. It'll highlight your strengths, your qualifications, past performances, in a format that helps them to procure or help their procurement officers understand whether or not you're going to be a good fit for a particular company or for a particular project. Okay. It's like a first impression document. Yeah, it needs to be clear and compelling because it needs to be tailored to investors that are going to be looking at it at one glance. This is not a prospectus. It's a capability statement that's going to be a part of your prospectus package. Okay, so the first thing you're going to talk about in your capability statement, and remember, it needs to be a one pager, no longer than a page and a half, and it needs to be concise. So you're going to use bullet points to talk about your company's purpose and the products and services that you provide. Then you're going to use just a brief statement to explain why your company is set apart uniquely from other companies like yours. You may have some unique methodology that you use, some certifications, some awards that's been granted unto you. Past performances, contracts or projects that you've done or completed, and you may in conjunction with some other companies, and that may not be relevant for depending on which company you are. You'll want your Dun and Bradstreet. If you've registered with the federal government, you're going to want your unique entity identification number and cage number that came from them. If you've not registered with the federal government, then you'll need your NAICS code and the size of your business and any contact information of key individuals, okay, and any website information. Again, if you have been certified with any small business designations, female-owned, veteran-owned, hub zones, all of that needs to be listed in your capability statement. It's a way to pre-qualify you in terms of certain investors, and for the government it sets you up for an evaluation for requests of information. So if they take a look at your capability statement, they may send you an RFI. That's a request for information, meaning that they want to get more information about your company because you look like you may be a company that they either want to contract with, or if it's a boutique brokerage, they want to list your company and help you sell your stock to certified investors and validated investors. Okay. So those things are included in the capability statement. So something else you want to have is a private placement memorandum. That's really important. A private placement memorandum. You'll see it listed, the acronyms PPI. Okay. It's a legal disclosure document. It's used when businesses seek to raise capital from private investors. Yeah, especially if you're not registered with the SEC. Okay. All right. And remember, you can do this. You don't have to do it through a boutique brokerage. The issue is that they have at their disposal validated investors, ones that have been verified in terms of their net worth, and they've been verified as well as the monthly cash flow that they have coming in. And they're considered validated investors. So in this private placement memorandum, it's going to be a document that comprehensively outlines the terms, the risks, the structure of any private investment opportunity that's available to an investor. We're going to show them and tell them the beneficial terms and any risk that are involved in investing in your company. You know, something like we're a very cash heavy company. That is a investor's dream. We have a excellent profit margin. That's an investor's dream. They want that. We have a swift turnaround in profit, low expense, low personnel. That's all important. When I say low personnel, I mean low personnel costs. In other words, a lot of your employees or staff, not necessarily employees, staff are contract labor, which means that you've got low personnel or payroll overhead. Yeah. All of those things are an excellent factor because that means that you retain more of your earnings, which creates a larger profit margin. So these type of companies, I already stated, they're used to sell securities like equity or debt to select groups of investors without going through a public offering. Okay. All right. Um, let's see. When we talk about the private placement memorandum, it's like a summary. It's an overview of your business and any investment opportunities. And we'll show you how to list those in bullet points. It talks about the type of security that's available, the price, the minimum investment, and the use of the funds. Okay. If there are any risk factors involved, detailed disclosures of the financial, operational, and market risks that may be involved with them investing in your company so that they've been made aware upfront. Like, for instance, if your business is seasonal, they'll need to know that because that could be considered a risk. Okay. Let's see. If your clients are clients that pay over 90 days, if your net term is like 30 days, but it takes them 90 days typically to pay in your industry, that's a risk. Okay. All right. I was trying to think of market risk, but anyway, that's enough to give you an idea of what we would be listing on your private placement memorandum. Then you're going to give a company overview, the history, the mission of your company, leadership bios, and your financial statements. That will be your income statement, your balance sheet, and your cash flow. Any legal disclosures, like any SEC exemption details. One would be, if you are not a member of the SEC because maybe your total overall assets doesn't meet the requirement. Or it could just be because you want to remain at a certain caliber and you're not interested in being a part of the SEC. But if there are any exemption details, such as you're not meeting the total profit margin criteria, then you can state that. You don't have to be clearly a member of the public stock exchange. But if there's an exemption that's there that will exempt you from some of the SEC guidelines, you want to list that in your legal disclosures. Any qualification disclaimers, you want to put that in there. All right. And then you want to include a contract for the investors to sign to participate. Yeah, you want to go ahead and put that in there because they may decide that they want to be involved. It's going to be this whole event that the brokerage boutique would have set up, and the investors are coming for the sake of purchasing stock in some type of privately held company. So you want to go ahead and anticipate that they're going to want to purchase stock in your company, and you'll provide a subscription agreement. That's a contract that the investors would sign to participate in purchasing stock in your company. All right. So I am going to pause. The next time we do a recording, what I want to do is I want to talk about, firstly, how the private placement memorandum functions. So you already know that it's used to legally raise capital without registering with the SEC. That's under exemptions like the Regulation D, which you would most likely qualify under. Even if you're making $1 million a year, you would qualify. for it, and I'll explain why in the next video. And the next video will be the next session. Okay. So it's a way for you to protect yourself by clearly stating any risks or disclaimers. That's why you're listing them on that private placement memorandum, so that no one can say that you did not make them aware of certain risks that will be involved. And even when you list the risk, you're going to say subject to, but not limited to. That means that there are other risks that may arise that are not stated here. All right. It's a way to build trust with investors by offering full transparency. And you can structure equity partnerships while investors contribute capital, but they remain passive. They don't want to get involved, but they want to contribute capital because maybe they like the project that you have proposed. And they want to make sure that you fulfill it because they want to have an investment stake in that project. It can seem lucrative to them, but they just want to remain passive. They don't want to be involved. And now you want to make sure this is a good offering. You know, if you're offering sweat equity, in other words, you're going to do the work and they're going to provide the funding. There are a lot of investors that look for that. You're not looking for them to do anything but provide the funding. They love that idea. And it's a way to quickly obtain private funding. Okay. I think I have another moment here. I tell you, it's important to me that I cover as much as possible because you guys may not see the benefit right now, but I think the more you keep hearing this, the more you will understand how beneficial this is going to be to you. I know in the beginning it's difficult to fathom, but I need you to understand that this is an opportunity that is going to be very lucrative to you and also to certain investors that get involved with your company. But the only way that they're going to know that this is available is that you have to set it up. You have to create it. And that's what I want you guys to do. I want you to get involved in creating these private placement memorandums. Even if you decide later that you want to pull them, that you no longer want to be involved in selling shares because they may be going faster than what you wanted, selling faster than what you wanted them to sell, and you no longer want to be involved. And I get that because I've seen that happen before. I still want you to take advantage of this opportunity. Okay. So quickly, again, the private placement memorandum that I've been talking to you guys about is a disclosure document. It's like a way for them to fundraise, and it's a cornerstone document that they use because really when investors come, I don't want to say that about them. Well, I'll just say they're really just looking to invest. That's what they're looking for. They're looking to invest, and they're looking to invest quickly, and they're also expecting that the boutique brokerage is going to have the information that they need, and they trust the information that's been provided by the boutique brokerage. That's the biggest thing. See, they're walking into a situation where they already entrust the environment. They don't have to know you. They know the boutique brokerage, and that makes it a lucrative venture for you. So when you're looking to raise money outside of public markets, it's a way that investors can clearly see that you are legally compliant, because you are a viable entity. You are a C corporation. Some of you are holding companies as well. And then you're clearly providing parameters about your industry. You're stating the risk, potential risk. You're stating the market shares that you have already gleaned and that you anticipate gleaning. You're stating the projects that you're going to fund with these funds. Okay. Yeah. It's not like a glossy brochure. A PPM is designed to protect both the issuer and the investor by ensuring that all the material and information is disclosed, but it's private. So the transparency reduces the likelihood of any disputes in the future. It provides a legal safeguard. So if any questions arise later, there's no misrepresentation or omission that can be blamed. And I'm going to state the key components, but I'm not going to take time to explain them because I'm going to go right out of this into another course. But let me just quickly, in bullet point style, talk to you about the key components in detail. And I know we just talked about it, but y'all, I want y'all to get this. And you're probably thinking, why is she doing this? Because I can see the potential in you all. Some of you are already making in excess of $500,000 a year. Some of you are making that almost consistently every month. You need to expand laterally. I don't want you to think that you can stay right here. That's not how it works. Nor can you continue to increase vertically. You've got to spread out. Yes, you do. You can do that through limited franchising agreements and also through issuing shares, selling shares of your stock. And the best way to do it and remain private is through a brokerage boutique. Now, some of the key components of a private placement memorandum, which is be necessary to put into your packet, it's an executive summary. It has the terms of the offering. It has any risk factors. It's got a company overview of your company, any legal disclosures that, such as, okay, like under Reg Z, there's Rule 506B and C that you'd have to comply with, which you already do. I wouldn't even be explaining this to you, but I'm going to give you details in the next session that I teach on this. I'll give you details of those parameters, so you'll have them for yourself. You can look it up for yourself. All right. Also, there's a subscription agreement that's will be in your packet, so that if the investor is interested, they can go ahead and sign it and engage. And on that subscription agreement, you're going to have your banking information that's there. So, because a lot of them will go right on and through the boutique brokerage deposit. So they will deposit with the boutique brokerage, and the boutique brokerage will deposit into your account and send you that signed subscription agreement with the investor. Yes. All right. So as a benefit to you, it's a way to access capital efficiently. It's a way to maintain control, to build investor confidence, and to protect against any legal challenges. And I'm going to stop right here. Investors really value that private placement memorandum. Look it up for yourself. They really value it. And we're going to walk through learning how to put it together. And then I'm going to watch you. For those of you who are interested, I really want all of you to do it. I really do. But this is your dime, and you may not be interested in doing that. But I would love to see all of you walk through putting this together, just like I walk a lot of you through setting up your C corporation and getting that in order. I'd like to see you walk through and put together this private placement memorandum and your capability statement, so we can get you on the road to become a part of these private placement boutiques. So I'm hoping that you'll be interested in doing that, because it's a way to advance your company. And I really want to do that. Yeah. So I want you to reach out to me after you get this. Please reach out to me after you get this video. Let me know whether or not you're interested, because we can walk through it step by step, and bam, you can have it, be a part of a brokerage boutique, and have your shares being sold to various investors that will fund your projects, things that have been on your heart for a while. They will fund them. Because it will be, see, with the last thing I'm going to say on this, the boutique brokerage knows how to go out and find investors that are passionate about certain ventures. So they'll find the investors that are passionate about the particular ventures that you guys are involved in or that you want to fund. Okay, and I'm going to stop it right there. I even include in this teaching a sample of our private placement memorandum, so that you understand how they are put together. Okay. Stopping right here, I'm hoping that this has been beneficial to all of you all after you see it. So when you get this email, you should get this. You should also have the summary. Inside of this is going to be added a video that we have in the, and I want to say, please watch the podcast. Look in your eyes. Please watch the podcast. There are different videos that are uploaded constantly. That's why you want to watch it. And what it does is it sort of solidifies what I'm teaching you in these videos and the material that's in the book. And I like to always put the book on each video. So let me just hold it up. Easy, comprehensive curriculum for new business owners. Easy corporate comprehensive curriculum for new business owners. You can pick it up on Amazon.com. I want to say to you that a lot of the information that I teach in the course, of course, is in the course is not in the book, or it's in the book, but I expound on it in the course. I also want to let you know that the updated edition, the new edition, the second edition, you know, this is a series of 3. The second edition, which is management services, is due to be released very soon. All of this information that I'm teaching now is going to be in that book. And of course, then I'll be teaching more information in excess of what's in the book. All right. So watch the podcast. And there's going to be a video added to this from the podcast that teaches about private placement memorandums and the boutique brokerages. All right. So hopefully this has been beneficial to you. If you have any questions, if you want to participate, if you want me to walk you through the process, let me know. There's no additional cost. We can just make that a part of your curriculum. All right. Y'all keep succeeding.